All right, guys, welcome to our August 18th, 2023 edition of This Week in Crypto. We've got a big one today after a big market flush just about 12 to 16 hours ago, give or take. This kind of capped off what was already looking to be a down week, and it went from being a slight depressing retrace week to a massive, oh no, what's happening to crypto kind of week. So we've got a lot to cover here, and obviously we can start by mentioning that what we do talk about today will not be investment advice. As always, we are here to analyze the markets and discuss the bullish and bearish divergences that are forming for many on-chain and social metrics right now. We are not here to tell you what to do with your money. That is entirely up to you based on the kind of metrics that you value most when looking through Santiment. So I will be solo today, no Maxim, but I have much to cover and will do my best to navigate the minefield that is crypto right now. And let's see exactly where the opportunities lie, right? Because for a lot of traders, this is exactly what many have been waiting for. You know, a flush back down toward that 25K level. I know it didn't quite get there. It only got to about 26.6, but considering the fact that it was kind of in that, 29K-ish range for so long and gradually sort of dropped down to 28 and then fell off a cliff to 26 and a half. I mean, this is the kind of dip opportunity that a lot of people want. And I'm not just talking about Bitcoin, which had a fairly mild correction compared to some of the historical drops that it's had, but especially altcoins, they've just been absolutely hammered. Even prior to what happened yesterday, they were flushing down pretty bad as Bitcoin's price dominance over them was just going higher and higher. So now we're sitting here going, well, everything is dropped down. The natural instinct, especially if you are relatively new to the space, is to say, oh God, I don't want it to drop any further. I better sell now. And it doesn't mean you're wrong. Nobody can predict markets. And oftentimes when prices drop, it's not the final drop, right? And you have to kind of weigh your risk tolerance and your guts, so to speak, by really analyzing whether or not you can take further losses. But for a lot of people who keep what's known as dry powder on the side and are ready to add more, these are usually the opportunities to do it. Doesn't mean you put in all your dry powder because things could drop even more and then you wish you had more. But at least where we are now, it's pretty clear that there is some dip buy opportunities going on, so much so, in fact, and I'll come back to this data screener in a moment. Check this out. This is the frequency of buy the dip or buy dips over the past 3 months, and look at the overwhelming spike that dwarfs anything else that just happened yesterday. Price isn't showing up for some reason, but obviously this is where the dip happened. And social volume went through the roof with lots and lots of optimism that this is the dip to buy. So far, as this is usually the case, the dip buy calls have been correct. However, it's kind of a catch-22 when you see an indicator like this, because short-term wise, the crowd can kind of will the price to come back up to a certain extent. But often if the crowd is too optimistic and they're like, wow, this was the opportunity, got to put all my money in here, the whales are seeing that, and they actually are, planning to let prices go down a little further before they put money in themselves. They want the best possible price to buy their thousands of Bitcoin or tens of thousands of Ethereum, while everyone else is kind of just sitting and trying to pounce on the small dips. Not that this was a small dip, but it's certainly not a massive dip either, right? It's kind of in between. So unless there's a massive dip, many people don't fully realize that whales are not quite going to go full bore on this. And we'll look at whale metrics in a little bit to see how they're behaving, reacting to this. We can see, a lot of the dip buying is coming from Reddit. It's often psychologically they're very much like the anti noob trading center. So whatever noobs think, and noobs obviously think that when prices go down, it's time for them to sell. Reddit does the opposite and goes, nope, you gotta buy when it goes down and sell when it goes up, which is a great idea. But there's sometimes in Reddit there's a lack of third wave or fourth wave where it's like everyone thinks this is the dip to buy, therefore it's not the dip to buy. Everyone thinks this is the top to sell, therefore it's not. So Reddit is understandably the leader. This is very common when you see a mid-sized dip. You'll see Twitter to a smaller extent getting its biggest spike since June. And then 4chan and Telegram, interestingly, have been pretty silent on it. I would actually say that the ideal setup would be if the social volume drops down and buy the dip, and there's another dip. Not that we're wishing for that. I know many of you are hoping your portfolios are going to rebound back up instantly, but if there's another dip and this time there isn't as much enthusiasm on dip buying, that would be a good sign that that actually is the true dip buy opportunity. If there's another dip and you see another huge spike like this where people are like, wow, now it's even lower, I got to buy even more, that optimism can create even more downside pressure. So it sounds sort of backwards, but that's historically how markets tend to fluctuate, and it's something we just have to be kind of mindful of. So going back to our data screener here, let's investigate exactly what's been happening. Obviously, the social volume for Bitcoin and Ethereum are up this week compared to the week prior, with this price volatility being basically the most we've seen since April, I believe, when prices were kind of topping out. Bitcoin almost got to 32K and then started to retrace. So now we're back, a little above 27. This actually says, do I have it wrong? 26.3? No, it's at 27 now. This is just a little bit delayed. But regardless, Bitcoin dropped 11% in the past week, and that's going to create a huge social volume influx. So more people are talking about Bitcoin, understandably, Ethereum as well. You can see XRP and BNB. A lot of these large caps are seeing slight upticks in social volume. And then let's go down to price. And we obviously see that Bitcoin's down 11%, Ethereum 9.4%, XRP, huge drop in this past week, which kind of makes sense considering they had that huge July and even late June, I believe, where they had that great SEC news where it was deemed by the US government that they are not a security. Everyone celebrated, prices went up. Now that that shine and euphoria from that news has kind of faded, prices are kind of dropping a little more rapidly than the rest of the assets around them. So something to be a little worried about. Litecoin, interestingly, continues to plummet. A lot of people thought, after the halving that was kind of disappointing, there would inevitably be kind of a rise that started to form. But here we are about 2.5 weeks after that halving happened, and it's just continuing to plummet at a faster rate than competing assets around it and its market cap. So Litecoin and XRP are kind of the big losers over the past week. Bitcoin Cash, another big one at minus 19%. You can see Aptos down here a little further at minus 19 as well. Axie Infinity at minus 19. So yeah, across the board, other than Toncoin, which is an anomaly. I'm not going to get into the primary metrics as to why Toncoin has held up so much better. But for the most part, pretty much every asset in the top 100 has declined, and it doesn't get much better as you go into the top 1,000, top 5,000. The vast majority of assets outside of a small handful, less than 3%, are all in the red over the past week. And we can also see the screener here showing that the overall market cap has dropped about 6.6% I wouldn't be surprised if it's even a little bit more than that because it's not quite covering all assets, but you get the idea. And then interestingly, I mean, you can see that the volume has risen, and that's not ideal, actually. You don't want to see volume rising into a price drop because oftentimes this is when everyone is panicking and either buying the dip or selling off so that they don't get hurt more. Um, and the way volume typically works, as TA traders will tell you, more volume going into a specific trend will more often than not continue to make that trend occur until the volume dries up. Prices go toward where the volume is increasing. So if volume is increasing as prices drop, that means that prices could inevitably drop a bit more. That being said, 12.5% isn't a crazy increase in volume, but it's a significant enough rise where across crypto, you've got to turn your head and be a little weary of that. And while we're here, I'm going to load up some of the leaders in development activity. I know that that's a popular metric here at Santiment. While that's going on, I can even pull up exactly why we value development activity so much. This is a older article, but still very relevant today. We scrape GitHub activity and then only pull out the notable development submissions that actually are improving the product. You know, we extract things like regular Slack messages, things like that. And overall, what development activity shows is that these people on the team believe the project will be successful, that the project is going to be shipping more features. And this is probably the most important, if development activity is rising, that's indicative that it is likely not a scam because there really are real people working on the project and trying to make it better. Just looking while we wait. Yeah, Atom had a huge social volume upswing. HBAR, yeah, up 48%, big upswing. Aave 37, the graph plus 48%. So yeah, lots of increases in social volume. And here we go with the development activity top 10. You can see Polkadot and Kusama sharing the same GitHub repository. They're staying at number 1 and 2, but Cardano is actually very close to surpassing them for the first time in over a year. So that's something to keep in mind. You know, if you're in the top 10, it isn't exactly like, you know, competition if one asset surpasses another in development activity, but overall, you know, you want to be seeing assets that are getting 100 plus GitHub submissions a day is a really good sign that it's a very active coding team and community that's trying to improve and innovate the product. Going down a little more, we have Hedera, which, as we saw, the social volume is up significantly over the past week. Chainlink back in the top 5. Over 400 submissions a day for Chainlink is quite impressive, and it's continuing to rise. Status 358. Internet Computer, Vega Protocol, Cosmos, and Aptos rounding out the top 10. And just to give you a few bonus ones, Decentraland, Ethereum, IOTA, Optimism, and Solana are 11 through 15 ranked developed assets right now. So that's it for the data screener. Now we're going to move over to some of the main on-chain metrics here. Take a look at exactly how things look after the bloodbath kind of commenced over the past 24 hours. And we start with on-chain transaction volume, where, yeah, we do see these clumps showing there was a bit of an uptick, but really nothing too special going on. You can see several different spikes here throughout the past 3 months that are pretty similar to what we're seeing now. So nothing special on the on-chain transaction volume end. Daily active addresses actually looking pretty good. We can see that the trend on daily active addresses is rising over the past 3 months. Right now, the average sits at about 959,000 unique addresses interacting on the network per day. As far as circulation goes, not looking as good. It's still struggling to stay afloat. The amount of unique tokens moving from address to address on the BTC network is underwhelming and concerning, because we need to see circulation and, to an extent, daily active addresses continue to rise in order to justify long-term market cap / price rises themselves. And as you would expect, this big dump here that happened yesterday caused MVRV, aka average trading returns, to plummet pretty significantly. The 365-day MVRV, which was sitting around 15%, was cut in half down to about 7.5% now. And then the 30-day went from negative 2.3 all the way down to negative 9.5. So yeah, it looks like there's starting to be a bit of an opportunity presenting itself here, with the short / midterm traders being pretty undervalued, and the long term getting pretty close to neutral for the first time in a long time. If I back it up to the last year, we can get a little more context. And we can see the last time that the 365-day MVRV was below zero was back in March. And we know what happened in mid-March, this huge bounce where you were able to, if you were savvy enough, you were able to buy this dip and benefit pretty greatly. But we're not quite there yet, right? The 365-day MVRV is still at plus 6%. So no guarantee, of course, that it will fall below 0%. Basically, the lower it gets, the better opportunity and less risk you have at being in Bitcoin on a long-term time scale. On the short-term time scale, though, this is the lowest the 30-day MVRV has been also since that same time in mid-March. That's pretty significant. You can only see a handful of times over the past year where the 30-day MVRV got below negative 9.5%. Just counting off the top of a quick data view, it looks like maybe 5 or 6 instances. It happens maybe once every 2 months. So yeah, no guarantee that it's going to immediately prop back up, but based on history and probability, it's a good sign that we are in a position that is rare and typically indicates undervaluation. Moving on to funding rates, we can see that the Deribit funding rate here in pink, that's gone very negative, something we should be mindful of. Oftentimes, even on the smaller exchanges, if we see a lot of shorting, it is a good sign that liquidations could occur, and liquidations on the shorting end can lead to rocket fuel to make prices go up even more so than they would otherwise. So that's Deribit. We don't really see much else, though. On the Binance side and BitMEX side, we see a little bit on BitMEX. There's a little bit of a short forming. Not a huge one by any means, but yeah, there's a slight short bias. And speaking of funding rates, let's look at our Sandsheets model that I've queued up. And we are seeing quite a bit of green here. If you see these green, yellow, and red bars through all of these different other indicators, we can see that there are roughly maybe 15, 16 or so different assets that are getting shorted right now in terms of average funding rate across multiple exchanges that we have data on. To name a few, based on the most extreme examples, it looks like Thorchain is being very heavily shorted. Kava is being shorted. Near Protocol, Bitcoin Cash, Axie Infinity, Band. There you see Bitcoin, as we mentioned, slight short. Cosmos, Decentraland, Dogecoin, Ethereum Classic, Matic, Polkadot, Stellar, Synthetics, Tezos, and that's about it. So quite a few different opportunities here, at least in terms of where traders are showing the most FUD. And with FUD, it means there's opportunity if you want to be a contrarian. Sometimes shorters are right. More often than not, they're wrong. And when they're wrong, you usually can benefit from their presumptions and greed that prices will drop. All right, moving back down on the on-chain side of Bitcoin, we can see the whale transaction count. Let's just make it, yeah, it's already on 1 day, never mind. So yeah, I mean, we saw this big uptick in $1 million plus transactions, and this was the highest in about a month. So certainly significant. It does indicate that whales are active on this dip and they do find it significant. We'll look in a moment at the context to see if their supply held and the amount of addresses are actually rising. But at least we can say that whales are active on this dip. And usually that's a good sign, indicating that there could be some dip buys going on. Let's zoom in here to the last month and look at the context. Clear my notifications really quick so they don't keep popping up on my screen. Okay, so the amount of addresses, we can actually see that the 1,000 to 10,000 Bitcoin addresses are falling. These are the largest, typically, of the active whales. Many of them are exchanges, mind you, but not all of them, and we still find them to be significant enough to be included in active whales. We could see 100 to 1,000 BTC addresses are moving down a little bit, and the 10 to 100. So that's not a good sign on the surface. Now let's take a look at how it looks with supply distribution. Let's go 10 to 100, 100 to 1,000, and 1,000 to 10,000. So quite interesting, actually. The largest of the three tiers, in the past 3 days, they've gone from 24.14% held to 24.04. So they've actually dropped about 0.1% of the Bitcoin supply, which is a ton of money. However, there are some slight scooping up indicators from the smaller whale address tiers. The 100 to 1,000 went from 19.82 to 19.84, 22.91 to 22.9 on the 10 to 100 end. So overall, if I merge all three of these, it should point to the fact that the last few days, they're still going down. Let me clear all these to show you. So this isn't great. We're seeing that it was at 67% held when combining the 10 to 10,000 Bitcoin addresses. This was just 1 month ago. Now it's down to 66.78. If we zoom out a lot to the last year, we see that the rise was really happening between April all the way up until June. And obviously prices went up during that time. After June 26th or 7th or so, then we started to see this gradual downfall. And where it stands now, I mean, it's still above where it was when these whales started accumulating in April. But obviously in the long term over the last year, not a great sign. If we go back even further, go all the way back to 2020, you can see the rise and fall pretty well. So they were actually accumulating all the way up until right about the end of 2020. This was really when things were confusing because COVID had hit a little earlier, right before this chart started in March of 2020. And by the end of 2020, people are going, why the heck is Bitcoin rising so much? I thought this was COVID and everything is supposed to fall. And then, of course, we get this then all-time high in April of 2020-21. Prices eventually drop off a cliff, and then the whales immediately start to accumulate after it drops all the time, and they accumulate right up until about 2 weeks before the true all-time high that happened in early November of 2021. They were holding about a total of 72% or so at its peak before they really declined and took profit more and more as prices really fell. Obviously, we saw this rise, but then it fell back down once again. And now they're holding about 66.78%. So since that peak, they have dropped 7.3, sorry, take that back, 5.27% of Bitcoin supply, while the price has dropped by 57%. So Yeah, it's not a coincidence. Whales do tend to be the instigators of price falls and price rises, and right now they've been kind of foreshadowing this drop. You can even see how much price is reflecting what the whales hold and don't hold at any given time over the past month. It's kind of been pretty consistent since April. When they rise, prices rise. When they fall, prices fall. And there's usually a little bit of foreshadowing too. So that's why this is a great alpha metric. You can react to when the whales are accumulating before the prices actually rise. And when they dump, you can take a little profit before they fall. If you were doing so before this drop, congratulations. For many who have been kind of waiting for us to regain like 31, 32K, it looks like we're going to have to wait a little bit longer now that prices have fallen back to about 27 at this moment. I'll come back to this metric. I always like to look at the ratio of transaction volume to profit to loss with a few other assets included. In the meantime, we can see that the mean dollar invested age curve, which indicates the average age in which BTC has been sitting in their respective addresses, it's still continuing to climb. The average amount of days now is up to 601 days. That is by far the highest of all time. Naturally, the older an asset gets, the more stagnant overall a network is going to get, because of the fact that more and more coins either get lost or they're just dormant, or they naturally gravitate toward hodlers rather than traders. But we will see another dip down at some point, just like the last big one that we saw in late 2020, obviously about a year before the all-time high. We saw this huge downturn where the average age went from a little over 430 all the way down to just 179 days, 178 days in on average where Bitcoin was held in an address. And then naturally it rose. We saw this second sort of dip right here as we hit the all-time high. And ever since that dip, it's just been a huge rise. And that's not ideal. We want to see the flattening out of the curve or even a drop of the curve as an indication that old stagnant coins are starting to circulate back into traders' hands and get onto exchanges and move around. And that's the kind of stuff that can really push prices upward over time. So the fact we're not seeing that right now is disappointing. Combined with the fact that whales are continuing to decline, we do have some things to worry about according to the on-chain metric. Network realized profit loss. We have seen a few drops here. Now, this drop here in late July, usually you actually want to see negative realized spikes, because that's indicative of traders capitulating, selling at a loss, and normally there's a bit of a grace period or a rise after those happen. That didn't really happen this time around, which is kind of rare because we saw it pretty clearly back in March and even back in November on a delayed timescale. But this time around, not really any reaction, and then a little bit more of some realized losses as prices have dropped, but nothing that significant yet. It might seem surprising, but Bitcoin might have to drop a little more before you really start to see some huge negative realized loss spikes that indicate that we're close to a bottom. We can also see supply on exchanges just continues to move down. This is still a good long-term indicator. Less and less coins on exchanges means less risk of another huge future sell-off. So we're down at 5.9%. This is the lowest since, I want to say, 2017. Check on that. So yeah, it's at 5.9. The last time we were this low, December of 2017. So we're coming up on, since the supply was as low as it's been, and obviously when it was low like that, prices were rising. And then eventually we had that top, but you can see that supply was going down. This big, huge upswing of Bitcoin came to exchanges in 2018, continued to climb. And then as prices went, or supply and exchanges went way down ever since about Black Thursday, and COVID kicked off, that's when prices really just took off. And obviously we still haven't seen Bitcoin's price go close to where things were when Black Thursday happened, or even prior to Black Thursday, going back to 2019, 2018. So it's all a matter of perspective, folks. All right, moving back up, let's go just the last month and look at social volume and dominance here. So unsurprisingly, we have the biggest social dominance spike in a month. Let's go back even a little further. Yeah, so I mean, it's back up to where it was in mid-July or so, but at least over the past month, this spike happened because many people were suddenly talking about Bitcoin after a big market-wide drop. This is normal. People tend to gravitate toward Bitcoin when there is a market-wide drop because the crypto sector is dependent on Bitcoin to allow other projects to succeed and rise. Even if people aren't investing in Bitcoin, they can still acknowledge that due to all the trading pairs and Bitcoin being the oldest asset in crypto, the OG, and the #1 market cap, it's going to have an effect on the rest of crypto, just like Google or Amazon has an effect on the S&P 500 due to how large of a proportion its market cap is relative to all of the market cap. Okay, so let's look at the ratio now of on-chain transaction volume and profit to loss. See what's popping up there. So, as we can see, there are some good bottom signals with all 5 of these assets: Bitcoin, Ethereum, XRP, Litecoin, and Cardano. They're all showing that traders are moving them at a loss much more significantly than at a profit. This is surprisingly rare, and the last time we really saw things this negative was way back in December of 2022. So this is the most loss-heavy ratio that we have seen as far as transaction volume goes of 2023. That's a big deal. And typically when you see a lot of negative ratio like this, it's a sign that we're close to a bottom, at least a temporary one. Sometimes it can be a short-lived bottom. Other times it can be kind of a kickoff to this huge mini rally that we go through. I would not, get too euphoric, considering there's still some other not so great indicators for Bitcoin at the moment. But at least on a short-term, weekly time scale, this does point to the fact that a recovery is a lot more probable than usual. Okay. So we've gone through some of the on-chain metrics for Bitcoin and for the social metrics on Bitcoin as well. Let's take a look at what the hot topics are in crypto for a moment, and then we'll look at some other metrics and then move on to a few questions. So as you guys may know, we have this page, which is fantastic and a great way to get a gauge on what's driving the markets at any given time, gives you context as to why a keyword is trending. This new AI summary just got better, as you can actually see without even having to click on anything what the explanation is according to our AI chat, and why that asset, or I'm sorry, that keyword is such a prominent discussion at the moment. So we can see right off the bat, Evergrande is the top trending topic. And apparently it's due to the fact that the Chinese real estate firm has filed for bankruptcy. They're a massive company in China's real estate industry. And the fact that it's filed raised concerns about the potential impact on Chinese economy and global financial markets. So yeah, this is an overall negative probably for everything. And we haven't even looked at equities versus crypto yet, but I'll do that right after this. If a major economy like China, just like the US is a major economy, if they go through some economic hardship and crypto is still linked to equities, which it is, they can take a bit of a tumble as well. SpaceX currently trending. So they've sold $373 million worth of Bitcoin. It resulted in $850 million being liquidated. So right off the bat, these top two topics maybe are what the crowd consensus is in terms of why this drop happened. I think there probably are plenty of other reasons, such as lack of whale support, but undoubtedly, you know, when you see the Chinese government or economy, I should say, going through a downturn, and a lot of Bitcoin being sold by the richest man in the world from his company, that's going to have a dramatic effect. Obviously, we can see the dip is trending. You would think this is a good thing, but like I said at the beginning of the call, we don't want a lot of people to be conscious of this dip and excited about it. We want people to almost ignore it and be kind of apathetic. That's usually the ideal recipe for a big rebound being imminent. Liquidated, that makes sense. A lot of leverage longs and things like that got closed or liquidated due to the fact that prices dropped as much as they did. ACH, I'm not sure on this one, due to its association with Huobi and ongoing promotional activities related to it. Yeah, I mean, I won't go into every single one of these, but yeah, overall, it's quite a bit of FUD news, as you would expect. And just looking through some of the hot topics, check this out: bear market rising rapidly right now. A lot more people have come to a conclusion that we might be in a bear market now, or at least they're proposing that topic on social media forums, and that's something we should be aware of, and that's actually a good thing. We want more people talking about this being a bear market and less people talking about it being a bull market. Prices, more often than not in crypto, go the opposite direction of mainstream expectation. Okay, heading back as promised, I want to look at crypto versus equities here. Let's take a look at Bitcoin versus Ethereum versus the S&P versus gold, all at the same time. And giving some context over the past year, you can see how the big separation happened in November of 2022. Most of you may recall, this is when the FTX implosion happened, and a lot of prices fell off a cliff in crypto, whereas equities were not impacted. In fact, they moved up as a result of the event. So this was where the big correlation break occurred. And then obviously Bitcoin spent another month and a half or so staying flat before rocket launching up, right? And this is so normal, going all the way back to Mount Gox. A big catastrophe happens in crypto. People are jaded and depressed for a while, and then all of a sudden things go up, and everyone wishes that they had invested during the time where everyone was in major FUD mode. So after that, the correlation between Bitcoin and Ethereum and the S&P, even gold, like they were all pretty tightly correlated. You can even see from March to mid-April, this month-long span here, Bitcoin took a big lead over the S&P, but then next thing we knew, after crypto topped in mid-April, as we saw whales were starting to take profit, their price started to go down, whereas the S&P continued to move all the way up to a 15-month high here in late July. And it still doesn't look like they are extremely correlated, which is a good thing. We had a separation as soon as, or as recently as about 3 weeks ago. Obviously, equities and crypto have dropped together. This could add to the argument that the Chinese economy might be pulling down everything at the moment. Evergrande and some of the other issues going on in the world have had an impact, and we've seen that plenty of times, going back to the Ukraine-Russia war, all of the FOMC meetings and interest rate decisions over the past couple of years, and of course, even COVID, right? So the correlation does exist, absolutely, but is it as strong as it was, say, a year ago? I would say no. I would say that the correlation is lessening a little bit, and the more we can see crypto and equities separate, the more likely that crypto can function on its own without the sensitivity it has to real world events. And institutional investors, maybe flocking out of crypto, going back to only equities, that further allows crypto to move in its own direction. Okay, so we're a little over 40 minutes into the call now. I think this is a good time for us to take a few questions. If there are any asset requests, I can check out any that you might have interest in, and we can take a look at what's going on. Gary, let me know if you're seeing anything. No worries. Okay, we'll take a look at a few of our own. One thing I did want to go over is the MVRV model, and it's showing that as you would expect, when you look at the 30, 90, and 180-day MVRVs all combined together, tons of underbought signals flying around. And it's going to do a little refresh here, which always takes a couple of minutes. But yeah, altcoins have been hurt pretty badly for about, I think, 2 months now, going back to mid-June, right after the ETFs kind of pumped up the prices of everything market-wide. You can remember that Bitcoin was very dominant during that time because Bitcoin was a focus of those ETFs, and other altcoins kind of were beneficiaries of Bitcoin pumping. But after that excitement died off, especially by late June, I'd say, like the 25th and onward, that's where you really saw prices plummeting, and many trader losses have mounted here, which is why we're seeing so many of those underbought signals that are going to come back in a moment, and we'll look at which ones are indicating the most underbought divergence from its normal standard deviation. The way it works is we aren't just looking at, which prices are most up and most down. We're actually calculating the actual returns of coins that are in traders' wallets. So we can analyze whether, when combining 10,000 different wallets, we see which ones got in above the current price or below the current price, and then we can actually tabulate which ones are most underwater and having the most pain and blood in the streets, as Mr. Warren Buffett likes to say. So if we look at a few that are standing out right now, XRP actually showing a huge decline, likely because it's really dropped ever since the huge price surge that happened, I think, about a month and a half ago. And that's causing this to be very underbought at the moment. We already saw on the data screener here, over the past 7 days, it's the most declined asset, or at least right next to Litecoin. So the two of them are the most in pain at the moment. And so it's no surprise to see XRP way up there. I can see that Bounce, ironically, is not doing that very well. It is way underbought at the moment. Dodo, these are going to be more abstract assets you may not have had on your radar for a very long time, or maybe not have even heard of. But regardless, we need to be mindful when you see such severe underbought signals for assets, because there could be some opportunities there if you want to make some speculative trades based on MVRV, which is a very valuable metric at Santiment. So Dodo, Constitution DAO, ARPA chain, League of Kingdoms, Litantree, Magic Token, Mask, QuickSwap, Serum, Storage, Super Rare. That's just to name a few. I saw just a few more crop up over here. That's 1 inch. What was this? League of Kingdoms. And then the only one I see that's actually in the negative is Merit Circle. Let's take a look at that really quick to see why Merit Circle, and the other one is Livepeer. I want to look at both really quick just to see if we have some context as to what's going on with those two and why they are exceptions to the rule. All right, so Merit Circle's trading volume has gone nuts. Let's see what the price is doing. We'll zoom in a little bit. Oh yeah, so they had a huge surge all the way up until August 14th or so, and then it has declined. Not a serious decline though. I can see why it is so high or so overbought compared to everyone else's underbought signals at the moment. Over the past, let's say 2 weeks or so here, 15 days, the price is up 46%. So that's interesting to see. Daily active addresses also, it looks like hit a huge peak here on the 13th. This would have been a good signal that we're close to a top. This was the signal that we were topped, and then it dropped back down. Whale transactions, nothing really too crazy there. Its current price is sitting at 27 cents. So that's about the start of the sharks and whales, and that's about the end. We do see there are a lot more, well, not a lot more, but at least over the past 10 days or so, there is a rise of about 4 new million to 10 million Merit Circle addresses. Okay, very interesting. Let me check the other one really quick. That was Livepeer. So Livepeer has a remarkably similar trajectory to Merit Circle. I don't know if they share a repository of some type, blockchain. I don't know enough about these assets other than the fact that they are ERC20s. But yeah, I mean, this one has seen maybe a little more of a steep decline. From the 5th to the 13th, it went up 133% or so. And since that peak right there, if I can get it perfect, it's dropped about 35%. But still, I mean, if you're looking at midterm traders, you can see why this one is actually showing an overbought signal compared to all the other underboughts. Much larger, I mean, circulation and active addresses are huge over the last almost 2 weeks or so after being fairly dormant. Outside of this, there was this big drop in June. This was market wide though. So this one might be the one to look at a little more if you want to actually choose an asset that has been rising and hasn't been as impacted by the altcoin purge over the past couple of months because of the fact that there's so much extra utility there. We can also see on the 30-day MVRV, yeah, it's interesting. On the 30-day, it just fell back below the long term, which isn't included on this MVRV model. The long term actually shows that it's right about at the same point, -2%. So they're pretty much flat now. So even if it's overbought on the midterm time scale, at least these two MPRVs aren't really indicating that it's in a severe, caution flag type of situation right now. Whale transactions have also been huge all of a sudden during that same time frame that started on the 7th. So yeah, it's interesting. There's a lot more activity. I want to look at this for a moment. Price is currently a little under $6. So let's look at I'll skip the number of addresses, go right to the percent holdings. Huge rise from, wow, is that right? This must be, okay, so hold on. This is very interesting. So, okay, it's not a tiny asset. It's the 142nd ranked market cap asset, which is certainly something. So if we look at these three together, 100K all the way up to 100 mil, they have been moving down. Get rid of these. So it's been on an interesting trajectory. Let's plot the price here for a second. I'm going to go back in time a little bit, all the way to 2020. Interesting stuff. Okay, so LPT's 100K to 100 million coin holders have been definitely showing that they accumulate when prices go down and they dump when prices go up. That's very typical. You can see they really dumped right at the peak there. Perfect timing. And as soon as they did, as it started to come back down, accumulation started happening. A little bit of a dump here. Big rise as it kind of fell all the way down in early January. And then, of course, we had a market-wide rise here from January to February. But it's still up. It looks like these key whales are holding between 100K to 100 million LPT, and they have 69.2% of the supply, so a little over 2/3. That's indicative of a pretty confident bunch of whales at the moment, and it's something we should definitely be mindful of. LPT, I don't know if it's coincidental, but it happens to stand for the same abbreviation, Life Pro Tips. Maybe it's a pro tip for you to follow the pros here if you want to take a risk, but obviously not an investment advice of any kind. It's up to you what you want to do, but I like the look of these key whales right here for LPT. Also worth noting, mean dollar invested age. Its curve has started to flatten and even drop a little bit. That's another good sign. You can see what happened when the curve dropped in March 2021. Prices went nuts. And then again, right here, prices went nuts as the mean dollar invested age declined. So yeah, I think that's another good sign there. And yeah, it's got actually has quite a bit of development activity. This is it's been rising over time. It's got a dedicated team. It's getting several dozen development activity submissions per week. So there's some promise here for LPT. I like that this one came on my radar. Well, unless there are other questions, I think this is a good time to wrap up. My voice is getting a little bit raspy here at about an hour, but I want to thank everyone for tuning in and checking out what's going on with Santiment's latest metrics. As always, we are here to provide any context and explanations you guys need to make sure your experience while researching analytics and metrics and investment opportunities on Santiment are a pleasant experience for you. So please let us know if you have any questions. Follow up in the comments. Hit us up on Discord. I'm there. Gary is here and always on Discord as well. And we're here to help make sure you are navigating the markets well. So I want to thank you all, and I wish you all a wonderful and happy and healthy weekend. Take care.